Welcome back to Tape Reading Concepts Traders. It is the 13th of December, Tuesday, and we're going to look at a rather challenging session on the S&P 500 futures. This is the March contract for next year. We're already beyond the rollover. This is a 610 ticks chart, and the regular session here, this opening bell here, came on the heels of a dramatic price action reaction with the 8:30 a.m. CPI numbers. You can see 125, almost 130 points here, vertical reaction to the upside in a market that was already anticipating bullish reaction. This type of price action definitely opens what we call a price action gap. Here you can see where price was balanced just before the opening bell and where it went with the reaction. As price stabilizes, often we're going to see price move into the gap, and in this case it did bounce right off of 4100, which is the round number just below here. We did get a meaningful reaction, and right before the opening bell it seemed that price will be trending higher, anticipating an attempt for further price increases here towards 4200. With the opening bell, however, we broke the back of these buyers and we did see follow through to the downside. Very aggressive price action, so unless you were pursuing that momentum relatively early in one of the initial slowdowns, it wouldn't make sense to take the risk further down the curve. Now, what happened about 10 minutes into the session is that the market changed direction again, and notice that it seems that the market is congesting here between 4150 and 4100, because each successive move on the heels of the news reaction is becoming weaker and weaker, leaving in effect lower highs and higher lows. You can see this reference point and then this reference point, which is created by the sequence of the initial high, the lower high right before the opening bell, the knee-jerk reaction here to the middle of the price actions spike with the news, and then the high low here that fell short of 4100. So it seemed that price will be deciding which way to follow through directionally from the middle of this range. And of course, these slopes are not necessarily definitive when it comes to the timing of this decision from the market. You can see that we didn't follow through to the upside, so more compression here. And the first time that we actually saw a meaningful break of one of these reference points is here, just after 10 o'clock, when the market actually broke the recent low and fell short of 4100, suggesting that the bias will be now to the downside and will be pursuing lower prices. One of the best places to get positioned with an early short idea is right here on the backside of this already established upslope, or a little bit later if you were waiting for the price action slowdown because of the strong reaction. Notice that we have a knee-jerk reaction here which betrays where the offer is, and when the market attempts to go back higher, we get a test of this zone and then a retest of this zone, and then another sharp reaction similar to the initial one, breaking a little bit lower. So here, somewhere in this vicinity, immediately after the test and the retest, you could bet that the market will follow through lower with a stop that's 4 to 5 points. I would say you really don't need to see more price action to the upside to decide that this market might again be getting pulled back in the middle of this previous range here between 4100 and 4150. On the flip side, it's virtually guaranteed that this time the market will attempt 4100, and of course, if you perceive the opportunity on the larger scale, you might also see further progress down here in order to close the price action gap and reconnect with prices that were found reasonable just before the news number hits the tape. So this is an opportunity that is anywhere here. You can see a short just above 41.15 could yield as little as 15 points. I guess it's a minimum of about 3-to-1 reward versus risk, but you could be pursuing at least another 15, 20, 30 points on the way down in order to close that price action gap, which would have produced a much more dramatic reward versus risk here if you were looking to take price down to the 40-60s, which would mean looking for 55 points, which is significant, and even a 10 plus reward versus risk ratio compared to the initial risk here. If you're looking for local placement, you'd have taken no heat if you got the placement relatively early after this decision point. You can see that the price action eventually even accelerates into a more dramatic fashion as we zoom through 4100 and follow through good 15 points lower. Price action started to stabilize here. At this point, since this is now a directional proposition, you could be looking to sell what is the average size pullback in this market. You can see that this type of price action, it's roughly 10 points, maybe just over, about 12 points, close to the opposite outer band here, is a good place on average to be short if you're not short this idea just yet. You can see that the market made a little bit further progress here. We got a slightly lower low and then eventually stabilized here sideways going into 11 o'clock. There was still a little bit of distance to close down to the bottom, but of course if the market flatlines, you could be looking to take your profits and leave this opportunity to the table. There was a very common interaction, one of the setups that we look most often for here at Deep Reading Concepts, where the proximal high created from this progression of lower highs and lower lows. You can see how this pivot got tested successfully here. It held. The market made an attempt to go lower but did not, defining this area of support. You can see that as the market made an attempt on that pivot, it really broke the proximal edge but couldn't really challenge the distal one, which was just below 4100, and then took a sharp turn and immediate follow through. This opportunity was compelling, however, limited price action for you to get filled. You can see that the market got close to the 20 SMA for an aggressive placement a few times, but never really connected with that number. So even if you noticed this opportunity, you might have missed the fill, because that's how the game is played in the market. Sometimes when sentiment is unequivocal, you might not really get a chance to participate, even though you know where the market is looking to end up trading. Would it get vertical follow through and another wave on the way down here towards that goal of closing the gap with the news reaction, which was just above 40.50. Price action once again had this same size counter directional movement of about 10 plus points, and then more follow through to the downside, more cowbell here on the way down as we were progressing here, roughly hugging this downsloping line created earlier from the sequence of lower highs in the initial pivots. In the beginning of the afternoon session after 1 o'clock, you can see right here the market broke here the proximal area of resistance, where we had this repeating pattern of double top or multiple pivots, and there was even an iteration of it here at a lower high. The market broke this, did have a reasonable leg on the way up, tried to stabilize above 40.50 for what could have been a mean reverting afternoon session, where we could have been looking to move back towards the middle of the sessions range towards 4100. However, that was followed here by a lot of back and forth. Now, in a market that volatile, if you are convinced that on the right side of, let's say, this line here in the afternoon session, you're going to see bullish follow through, but you're not long just yet, you could be looking to buy discount prices. In this case, the lower outer band in a market with extreme volatility tends to work out on average better than not. And furthermore, it is a great reward versus risk opportunity, because there's a minimum amount of risk here. I'll probably keep my stop just below this inverse platform, so I'll be taking no more than about 4 to 5 points of risk, and I'll be looking for a minimum of a move back to the opposite outer band, which is again 10 plus points, so better than a 2-to-1 reward versus risk. And of course, again, if you believe that this is now a bullish progression on the right side of this pane of glass, then you're technically supposed to bet for a higher high, which means that a placement here in the low 40s could be looking for 20 plus points for development here on a new high above the 40.60 reference point. In this case, the market did get there only for a brief while, and then a classic chimney formation here. You can see how the market came up here, short deliberation episode, and then just as strong and even stronger reaction on the way down. There was no support here at any of these previous levels, and the market promptly tanked here down below 40.40, and then you can see how it turned right back again to come to the 40.50 line, which was evident that in the afternoon session we are so far hugging. You can see that the actions and reactions above and below this line do tend to match each other, and this remained the case for the majority of the afternoon session. These mean reverting episodes, as the market here was looking to close cautiously in a safe territory between the reference points. These are common events. They are tradable. In this particular situation, you'd have to look for extreme prices and try to fade the move, which would mean, for example, that this parabolic excursion outside the outer bands is something that you could look to short immediately as you see signs of slowdown after the market gets overextended. So in this case, shorting somewhere in the space and looking for a mean reverting move. You could get out in the middle, or you could anticipate that the market will offer more on the way down, in which case if the market reverses back here, you should probably limit your risk and get out of this opportunity anywhere from maybe just above this previous pivot, which would mean you would salvage a few points in this opportunity that did not work out, or of course close to break even if you perceive that another push higher from the middle would mean a potential higher low and a challenge of the top. So not that many opportunities in the afternoon session, but a few well-priced, strategically anticipated price action moves in this mean reverting context could indeed yield great reward versus risk on a couple of participations. So in general, a challenging session, which tomorrow with the FOMC will likely see more development. We do anticipate that it will be either a very frustrating mean reverting session, or potentially, since the Fed is hardly going to introduce any new variables to the equation, is going to be a great momentum trading session with increased volatility. If a clear directional bias is established, we're likely to see a plethora of opportunities. This is tape reading concepts. Let me know if you have any questions. Hopefully you're managing to dominate this recent market volatility, and I'll catch you traders in another video on our channel.